Hey guys, I hope you're having a great weekend. If you love the content, please like, leave a comment, and share with friends. Also, check us out on Instagram. We've got lots of great content over there. So we missed last week analysis because I had a very busy weekend, so I couldn't, come up with a weekly analysis for last week. But today I'm here and we're going to be taking a look at a few chart analysis. So we're taking a look at gold, EUR-USD, USD-JPY, and GBP-USD. So just these four um, trading instruments for the week ahead. So as usual, I'll be starting with gold, okay? So on my chart here, we can see the weekly time frame for gold and something interesting is happening. Okay, so we're going to take a broader look of the gold chart from a technical point of view in order for us to deduce the next possible direction, okay, or to deduce great trade opportunities in order for us to take advantage of this price action we can see on the gold chart. So remember, we've been following up with this weekly support level on gold for quite some time now, and it seems price has finally come into this weekly support level again with an attempt to break through last week. So we couldn't break through, so we had this weekly close just at the bottom of the support level. So the last time we had a candle close at this level was in 2020 June. Okay, so since June 2020, so approximately 2 years ago, we've not had price close at these levels. So I know most of you might be thinking that this is actually a clear breakout because we've had price breach through this level. But I just want to urge you that this isn't a clear breakout yet. So I didn't mean we had this red candle closing around these levels, then this would have been a clear breakout with an anticipation of a retest or a consolidation before we go further downwards. But this doesn't mean we are going to reverse. So we are just currently on the fence. Okay, so we might go up, we might go down. So there's no confirmation as to if this weekly support level has been broken or if there's going to be a solid reversal. So remember guys, we trade based on facts, based on what we have on chart, and not based on assumptions. So we're going to go down to the lower time frames now in order to try as much as possible to deduce what's going on in this immediate bearish trend in order for us to predict the next possible actions for the price action on gold. So I'm going to start with the daily time frame. So moving on to the daily time frame, what we can see is this channel. So I'm just going to draw this channel. So this is it. So we had this channel on gold, and we've been following this channel for quite some time, and it's been accurate so far. So what we can also see is that if you go down to the lower time frame, so let's say 12 hours, so this is clearly visible, we can see that this is kind of like an area of value, okay, after we had this breakout, and now we're currently kind of like testing this area of value. So I'm just going to reduce this weekly support level a bit in order for us to get a precise area of value. So I'm going to just give me a minute. So we have this. So I'm going to put this at the base. So we are going to work with what we have in this channel. In fact, let me just get rid of this main weekly support level. So we will revisit that if there's going to be need for that. So we already know this movement here brought us very close into the weekly support level. Okay, so I'm going to use this instead to mark out our weekly support level. So it's neat. Just 1 minute. So I'm going to use this horizontal tool. So yes, so we're going to use this as our weekly support level. So I'm going to make that 2 lines for more accuracy. Okay, so this is our weekly support level. Okay, so we're using the base of the week to measure at our weekly support level. Now, using this channel, what can we see? We can see that there's some sort of area of value across this level. Okay, so that's what we can see right now on the chart. So this is an area of value. So what I'll be watching out for in order for me to go short in continuation of this breakout is, as usual, a consolidation. Okay, so some sort of consolidation around this level, signifying that we might be going down and a breakout before I consider going short for gold. Guys, this is how I trade with patterns, I trade with confirmations, and it gives me precise entries from my trades. Okay, so So this is what I'm going to be watching out for. So we might come straight to retest this area of value, consolidate a little bit, and a bearish breakout is what I'm going to be watching out for in order for me to go short on gold. So looking at the other side, okay, there are two sides of the coin. Okay, we have to anticipate possible movements that will give us great opportunities to go short, and also movements that will give us an opportunity to go long. Okay, so in order for me to go long, I will wait for something like this, a break back above this area of value, some sort of consolidation. Okay, then a breakout above this channel is what I'm going to watch out for in order to go long for gold. And in addition to this, I'm also going to wait for something like this. Okay, some sort of a break above this high. So if you take a look at this immediate trend, so we had this swing high, we had a low, we had a high. So this has formed a series of lower lows. So 1, 2, 3, 1, 2, 3. So a lower lows and lower highs, signifying that this is an immediate bearish trend. So waiting for price to go above this area of value, consolidate, and break above this high would probably signify that there's likely going to be a change in the direction of the market. Okay, a change in the price action. So something like is what I'm going to watch out for in order for me to go long for gold. Okay, so this is the 2 hours time frame, so it's a bit high. So I'm going to go down to the lower time frame so we can get a clearer picture of what's happening down here in order for us to get precise trade entries. Okay, so it's much more difficult to get precise trade entries when you are taking a look at the chart from a higher point of view or a higher time frame as compared to taking a look at the chart from the lower time frames. Okay, so remember, the overall market view is that in order to go long, wait for a break back above this area of value, a consolidation, and a break of this the immediate lower high we had before this bearish move, and a break of this trend before we consider going long, because you can see price was rejected at this level, and at this level. So we've had 3 clean price rejections. So if price were to break through this level, this high, with a bullish consolidation like this, then that's going to be my confirmation to go long for GBP-USD. But for now, I'm going to remain bearish because there is no indication that we are going higher. Okay, this hasn't happened yet, so we are more likely to go down than to go up. So this is where sentiment comes in. Okay, so it's good to keep an open mind. The trend is clearly showing us that we're in a bearish trend, so we are only going to consider going long except there is a price action signifying that this bearish trend is likely coming to an end. But remember, to go short, we're going to wait for something like this, a consolidation and a bearish breakout, in order for us to go short. So it's similar to what we had here. So I'm going to go down to the lower time frames now in order for us to see what actually happened last week that took us downwards to these weekly support levels. So going to the 2 hours chart is interesting. So I'm going to get rid of some of these lines in order for us to see clearly what's going on in the market. So I'm going to get rid of this weekly support level for now. So yeah, so this is what we have. I'm going to take this a bit higher. Okay, so this is our area of value, right? So now we had price coming down and consolidating around this level, and then we had this massive break through this area of value. Okay, so what we saw on the higher time frame, or what I explained on the higher time frame, is waiting for a retest of this level and a consolidation, then a bearish breakout before consider going short for gold. Okay, so it depends. It might be an ascending triangle, descending triangle, a bearish rectangle. So any bearish continuation pattern signifying that this bearish momentum is going to continue is what I'm going to watch out for in order to go short for gold. Mind you, this can take time to play out. Okay, it can take 2 weeks, it can take a month, it can take 2 months, it could take hours or days, but you just have to watch out for those continuation patterns in order for us to go short. So something else I want to also draw your attention to is that the use of Fibonacci retracement is very important when trading this steady bearish grind on assets like gold. So for example, if you take this high, so this is the high where we had the previous rejection from the top of our channel. Okay, so if you take this high to this low, you can see we had a bearish move and we had price rejected at the 50% fab level. Okay, so the 50% and the 61.8% fab level is one of the most important Fibonacci retracement levels to watch out for when trading, trend continuations. Okay, so now we had this move upwards and price retraced. We had a retracement to the 50% fab level and price reversed, continuing the bearish trend. Okay, so moving on, if we take a look at this high down to this low, you can see that price actually got stopped at around the 60%, the 61.8% fab level. So what I'm bringing to your attention right now is that we are going to play with the range between the 50% and the 61.8% fab level in order for us to get a clear indication of where we might see possible price reversals. Okay, so in the past we had retracement from the 50% fab level. Now we had another retracement from the 61.8% fab level. So clearly, according to the price action with gold in this immediate bearish trend, price has reversed between the 50% and the 61.8% fab level. So if you bring the same principle down using price action, remember price action is simply the study of past price movements to make accurate, future price predictions. So if you bring that down, you can see that the 50% fab level is just around this area of value. Okay, so this means if price comes into this area of value, there is a likely chance we are going to get a reversal. Okay, so if we get our consolidation like this, so let's say we get our consolidation like this, and we get price multiple price rejection of this 50% value, then we can deduce that there's a potential or a possibility that price would reverse in continuation of the trend because it has happened in the past. Okay, so now the fact that it has happened in the past doesn't mean it's going to happen again, but this is going to add more validity to our analysis when looking forward to open trades like this on gold. Okay, so this is what I'm going to be watching out for. If we get this bearish continuation pattern with a test of the 50% Fibonacci retracement level, so I'm going to play within this range, within the 50% and the 61.8% level, then my stop loss is going to be just above here. That's if I get a reversal pattern or a reversal candlestick at this level, signifying that we're going to continue the trend. So that's going to give me one entry. I'm going to show you what I mean when we go over to EUR-USD. Okay, there's something really important that happened last week that I want you to, that I want to share with you in order for you to solidify your analysis as you move forward with your trading next week. So this is what I'm going to be watching out for gold. I'm going to wait for a bearish continuation pattern in order for me to go short. So it's going to be something like this. So retest, consolidation, and a breakout. So that breakout is probably going to take us way below the weekly support level if it happens. So something like this. This is an ascending triangle with a slight rising price action, so rising lows. Okay, so this is some sort of a bearish continuation. If we get a bearish breakout, it could be a rectangle, it could be a flag. So however the pattern forms, as far as we're having a bearish breakout signifying a continuation of this trend, I'm going to go short, and that short is probably going to take us way below the weekly support level, as we talked about in the beginning of this video. So that's it for gold. Moving on, I'm going to be talking about EUR-USD. So this is a 4-hour chart. I'm going to quickly go over to the 6-hour chart. So as you know, we've been following EUR-USD for quite some time, and this is our immediate bearish trend. So at the top of this trend, we've had multiple price rejections. Okay, so if you could close your eyes and just open a sell trade whenever we hit the top of this channel, or the resistance level of this channel, or the support of this channel, to go long. But I'm going to show you something very interesting on the EUR-USD. Okay, so remember I was talking about using a Fibonacci retracement tool on the gold. So now if you take a look at EUR-USD, so look the top of the channel to the bottom, you can see clearly that we had a price reversal at the 50% Fibonacci retracement level. Okay, and this 50% retracement level closely aligns with the resistance level of the channel, so the top of the channel. So this blue line up here is the top of our channel, and the 50% Fibonacci retracement level aligns with the channel. Okay, so we had one reversal from the 50% level, another one, and a third reversal from the 50% fab level on EUR-USD, which sent us down. So this is just a no-brainer that we would be going down. Okay, so if you had open a sell trade at the break of this support level, so as you can see here, so I'm just going to mark this out. Okay, just give me a minute. So as you can see here, if you are taking this support level and went short at the break of this support level because we had a bounce of the 50% level on the top of this channel, then this would have been a great trade for you. Okay, so this is one scenario. So another scenario is this. Okay, I'm just going to show you another example real quick. So if you take the top here, okay, take the top here down to the bottom, you would realize that we had another reversal of the 50% fab level. So remember, we took this top to this bottom, 50% fab level, we had a retracement level, we had a reversal. So taking this top to this bottom at this level, we had another reversal at the 50% fab level, creating a double top and price rejection at the top of this channel. Okay, so this is another opportunity to have gone short again on EUR-USD. So this is just a game of patience. Okay, if you have patience, you wait for the right time, you are going to get awesome trade opportunities. So if you didn't open a sell trade here, so a break of this trend would have given you a good opportunity to go short, because we've had this price rejection at the 50% fab level and the resistance level of the channel. Okay, so one more example. So this is what happened last week. So using the past price action of EUR-USD, we can also take the top of this level to the bottom and try to see where we would get another possible reversal, and that had happened to be the 61% Fibonacci retracement level. So I'm going to go down to the 4-hour chart so we can see clearly what happened at this level. Okay, so excuse me, I'm just going to get rid of this 5 so to make everything clean. Okay, so this is it. Okay, this is the 4-hour chart. You can see that taking the top to the bottom with the Fibonacci retracement, we had price rejection at the 61.8%. Now, one of the reasons why I wouldn't have gone in at the 50% was because the 50% fab level was kind of like a bit off from the resistance level of our channel. But you can see that the 61% level held quite nicely, because one of the reasons is because we had price bouncing off the resistance level of the channel as it has done before in the past. So another thing to also watch out for confirmation is the RSI. So as you can see, the RSI was also overbought. At the same time, we had this tap into the top of the channel, so the resistance level of the channel, and also the 61% Fibonacci retracement level. So this is kind of like a 3-way confirmation that we are likely going to see a reversal. Okay, and something else that happened was this. So if you check this place, you see what happened. We had a bullish run up into the level, we had a slight rejection, another touch giving us a double top before we fell sharply. So the same thing happened here. Okay, we had a bullish run up, slight reversal, another run up, then a bearish movement. So if you're able to pay attention to these things, you will just find out that trading is simple. Trading is not as difficult as people portray it to be. Okay, you can actually make a lot of profit from trading simply by following price action. Okay, looking for repeated chart patterns, as I have explained on EUR-USD. So you can see what happened multiple times. It happened again. I actually went short on this trade, and I'm still holding the trade right now. So since this passed, so what can we watch out for areas in order to take advantage of what's going on in the market? So this is what I'm going to do. I'm going to take these lows. Okay, so this is kind of like a support level, a trend support level. So I'm going to go down to the 2-hour chart so we can see this clearly. I'm going to wait for a break of this level. So the break is going to come with a consolidation. Okay, so I'm going to wait for price to consolidate above this level, so something like this, and a break of this level is going to make me consider going short. So even if that level breaks, I'm also going to wait for a break of these lows. Okay, so I'm going to wait for a break of these lows in order for me to get that solid confirmation that we are going short. So this might happen immediately, it might take a while, so it might happen next week. So on Monday you can get something like this and a break like this in order to go short, or we can take the longer route. Okay, so which is this one I put here before. So it could just be a move, a swing, and a bearish breakout it could take a while. It could take the whole of the week, maybe happen on Thursday or Friday for this to play out. But this is what I'm going to watch out for in order to go short if I wasn't already on the trade. And I'm also going to wait for price to break through this level of support before I go short. So this for EUR-USD, I'm not thinking about going long. I have no reason to go long, and I'm just going to wait. I'm just going to hold the trade till we come close to the bottom of this channel. I'm not saying it's compulsory that we're going to come to the bottom, but it has acted like that in the past, as you can see on the higher time frame. So I'm going to go back to 6 hours chart so I can show you what I'm talking about. So each time we had a price reversal from the Fibonacci retracement level off of the resistance level of the channel, we had price going down. So we had a reversal, we had this big consolidation here, and we went down to the bottom of the channel. Okay, so same thing happened here. We had a big reversal, we had this consolidation here, and price went down to the bottom of this channel. So right now the same thing, we had a reversal from this resistance level of the channel. We had a big reversal, so now we are having the same consolidation, which on a breakout is likely going to take us down to the bottom of the channel, which is going to make the US dollar way more valuable than the euro. So that's it for EUR-USD. I hope this shed some light on what you should be watching out for next week on EUR-USD. Moving on, I'm going to check USD-JPY. So USD-JPY has been an absolute monster. We've just been in this massive bullish trend on USD-JPY. So since we've passed all this level, I'm just going to show you real quick what I will be watching out for USD-JPY in order to either go long or go short. So going down to the lower time frames, 2 hour chart. So this is what we can see. Nothing much to see. So we have a resistance level and we have a support level. So if we get a bearish break from this support level, a retest and a reversal, then I'm going to consider going short for USD-JPY. I know this goes against the rule of not opening a set trade in a bullish trend or opening a buy trade in a bearish trend, but I think I'm going to consider going short for USD-JPY if something like this plays out. And if we get a bullish breakout, a retest, then I'm going to go long. But this is going to be my most likely scenario. So in order for me to go short, I'm going to be more careful, okay, with my short position than with my long position. So for the short position, I'm just going to wait for a more I'm going to wait for more confirmation. Yeah, that's what I meant. I'm going to wait for more confirmation signifying that we are indeed going to go down in order for me to go short on USD-JPY, or a confirmation that we're going higher, which would be breakout or retest, in order for me to go long. So something else you could watch out for is this. So I'm just going to show you. So what I just talked about now is a breakout, retest, and a follow through with trade. So you could also wait for something like this, a breakout, a bearish continuation pattern, and a break of that pattern for you to go short. Or you could wait for a breakout, a consolidation, okay, a bullish continuation pattern, and for you to go long. So it does not necessarily have to make a retest. So if it makes a retest, a reversal, then you can go long or short. If it also makes this a bullish continuation pattern or a bearish continuation pattern, then you can also go long or short. So something else you have to also take note of. I know some traders would want to go in on a short position like this. So I'm going to show you something real quick. So I know you might take this trend line and say you would go short because it seems to have broken this trend line. That's not actually a bad idea, but I wouldn't be going short because we still have this support level to battle with before we go way down or way lower, or get a reversal. So opening a trade next week, because we can see a slight break of this trend line, would not just be worth it, because if you open a trade, it's just going to be 100 pips, okay, and you are likely not going to hold the trade to this level. Maybe you want to close at this level because of possibility of a reversal. So this is just 60 pips. I'm not just going to risk my funds playing with this trade. But if we get a breakout, a retest, and the RSI is in a good spot, then I'm going to consider going short. And the same thing applies for going long. So I'm going to show you something else, something really important, okay? So on a 4 hour chart, what you will notice is there is weakness in the relative strength index of USD-JPY, okay? So as you can see, look at price here. We had this top, right? we had this top on RSI, but we had a double top, so price coming back to the top, but on the RSI price is actually declining. So this is a kind of like a hidden bearish divergence. Okay, so you can see the strength of the RSI is declining gradually, and on the price it's showing something else, showing something different. So this is something to watch out for on USD-JPY before opening any trade. And as you can see on the RSI, if you take a look at the lows, you will see that price has broken through this support level. So this is kind of like a symmetrical triangle or a descending triangle for USD-JPY using the RSI as a case study. So you can see that price seems to have broken the RSI, giving us this sense of bearish pressure coming towards the USD-JPY pair. But you can see we had a double top. So a double top also signifies the end of a potential bullish run. Okay, so this might be a good opportunity to go short, but I wouldn't be jumping in until I get that confirmation that we are indeed going to go short. Okay, so another thing you should also understand is that even if price moves from this breakout of this channel, this trend line down to this support level, the movement from year to year could actually take the RSI to being oversold, which could eventually lead to a price reversal going higher. So this could just be that price going back to test the support and continue the bullish trend, which would also take the RSI down to the oversold level for a bullish move. So these are things to pay attention to when you trade these currency pairs. So moving on, I'm going to talk about GBP-USD. So nothing really significant to see here. So we had this channel, we had a break of this channel. Okay, so we had price struggle to break and try to make a reversal, but we had a bearish momentum. So this bearish momentum we can see here was as a result of the inflation data in the US economy that came up last week. So inflation came out bad, poor than expected. So that's why we had this massive bearish move on GBP-USD. Also this bullish move on USD-JPY, and also this bearish move on EUR-USD, and same with gold as well. So this bearish move on gold. So these were as a result of the inflation data that came up worse than expected last week. So next week we are going to get interest rate report from the Feds in the United States. So we are anticipating a higher than expected interest rate. If that happens, then you can expect the major currency pairs having the US dollar as the quote currency to even see more declines, and it's going to affect the stock market, Nasdaq, S&P 500, Dow Jones. So they are all going to take a deeper dive if the interest rate result comes out higher than expected. So for GBP-USD, remember last 2 weeks we talked about watching out for this support level. Okay, so this support level here happened, let's see, this happened in 2020. So we said if this doesn't hold, then we'll target lower levels, and those lower levels date back to 1985. So if this level doesn't hold and GBP-USD breaks this level, we are going to target these lower levels. Okay, lower levels of 1.05 for GBP-USD, which would bring the pounds closer to parity with the US dollar. So I don't know if this is going to happen, but we're just going to follow the market wherever it leads. So just a quick look, what I'll be watching out for GBP-USD is simple. I'm going to watch out for the same patterns that signifies that we are either going to continue the bearish trend or we are going to see some sort of bullish reversal. Okay, so now what we can see is price is currently at the low, so I wouldn't be going short at this level. Okay, because we are currently close to the oversold level in the RSI. So this is the 2-hour chart on GBP-USD. So what I'm going to watch out for is some sort of big consolidation, signifying that we are going downwards before I think about going short or going long or on GBP-USD. Okay, so something like this. So excuse me. So I'm going to watch out for something like this. So like this, a consolidation like this, forming some kind of support level in order for me to get that clear sign of a breakout before going short. Or I'm going to wait for something like this. I'm going to get rid of this. I'm going to wait for a pattern that gives us a clear sense of a resistance level and a break of that resistance level before I consider going short, going long on GBP-USD. But the thing is, sometimes the market might not give you what you want, so you just have to be patient enough for you to get a clear pattern signifying that we're either going lower or going higher. So for now, I can't see anything like that on the chart, so I can't even pick this level as a good level of as a good area of value, because we've broken, retexted, and it doesn't look enticing to me. So I'm going to stay away from GBP-USD for now. So this week, I'm going to watch out what GBP-USD does, and I'm going to act accordingly. But for now, I cannot see any clear pattern signifying that we are going lower, or a clear pattern for me to go short on GBP-USD. So I'll be focusing more on gold, EUR-USD, and USD-JPY for suitable trade opportunities. So before I leave you guys, something important to watch out for is that if USD-JPY tends to be bearish, then you can expect EUR-USD, GBP-USD, and gold to become bullish. Why? Because they are just on opposite side of the spectrum, okay? And that's if the US dollar is the major driver of the market next week. So a weakness, a strength in Japanese yen might lead to a decline in USD-JPY if the dollar remains dormant, which would actually not affect the GBP-USD, EUR-USD, and gold. But if dollar gets weaker, which would mean that USD-JPY is going to see some bearish move, then you can expect gold, EUR-USD, and GBP-USD to gain momentum, okay, to become bullish. So that's how to move along with the correlation between these major currency pairs having the dollar as either the base currency or the quote currency. So that's it for this week, guys. If you love the content, please like, leave comments, share with your friends, and don't forget to check us out on Instagram.